have been holding steady after a sharp fall in April. What is your view on the reports of physical buying and also on price outlook for the metal?
Yeah, Cathy, look, it has been quite an interesting move. When I look at gold, it is going through a consolidation phase. It is actually torn between, I think, the speculative traders wanting to sell it and the physical market wanting to buy it. And I think that the intriguing part of the story is the physical side of the market, where we are seeing just a lot of physical buying. And that buying is not just because we're into a festive season in India or good demand out of China, but it's also buying out of the UK, also buying in the States, where obviously we lost, or we didn't have, or the mint didn't have enough supply for some of its lowest denominated eagle coins. So when I look at it, the market senses that there's a true value in actually holding the physical, and I don't think it's just restricted to the gold market.
Inflation in much of Asia has started to ease. What kind of impact would this have in terms of commodities investment?
I think when you look at it, I think that the story about inflation under control and easing sort of coincides with a complete increase in the amount of inventories and commodities. I would like to see that inflation start to pick up, given the serious amount of stimulus that has been thrown at the market. If we don't see the prices pick up or inventory start to draw, then we really have to question the stimulus programs which were put in play. I actually feel that inventories have got to a level where we will start to see more buying, because it does represent very good value.
Which will provide investors better returns? Commodities-linked equities or the hard physical commodities themselves, and why?
I think, Cathy, this is a very interesting point, because the trend of late is for people to hold on to the physical. Now, that's just not from the investor perspective, it's also from the trader. And some of the large trading houses are seeing value in actually holding on to the commodity they trade in and storing it as a store of value. And we're seeing that obviously within the copper complex and also within the oil complex, where a lot of the big trading houses are saying, well, look, I'm going to hold on to the physical because I think that's better. I do think that there is a problem in terms of the equity-related transactions, because I think the market's looking at more of the, I guess, Fed-induced valuations, and that to me is one of the big points that we have to consider. You know, are the equity-linked products there in terms of the commodities at good value, or will they suffer if in fact the equity markets come under pressure? And I think that that would be the case, because there's this overwhelming issue that if equities or the whole group of equities come under pressure, then so will some of these funds. So I think the better value is to stick with the physical at the moment.